Hello, my name is Wilkinson. I'm from Future Gen Solutions, and this afternoon I'm actually going to talk about the third concept in the super manager process. Today I'm actually talking about investments, what investments you can use within the super manager process. Unlike public offer superannuation funds, the range of investments that you can do through the super manager vehicle is fairly much unlimited. So you can invest in certainly cash, an obvious one. You can invest in shares, you can invest in property, you can borrow to invest in property, you can buy a business, you can invest in gold, silver, other precious metals, you can invest in art and collectibles. So the full range of investment options remains open to you as the trustee of this superannuation fund. But you've got to be careful and you've got to use your discretion. In the diagram today, I've illustrated an example where two trustees have money in their cash account and they've got a series of investments. In this case, one of the trustees is an executive, and that executive also has private equity. So a lot of our clients are executives, and what they do is they actually have access to taking shares from their employer. So the purchase of private equity, as it's called, is one of those things which is hard to do through any other sort of vehicle which isn't under this concept. Secondly, in this case, in this example, the trustees have also decided to buy a property, and they have a lot of equity in this property, and they've got a smaller debt facility. And what's occurring is that the repayments for the debt facility are occurring from the cash account. Into the cash account, they're still putting contributions, their superannuation contributions by their respective employers, and they're putting additional contributions in themselves. But the flexibility exists that we have one account, one wealth vehicle, which is also capable of paying out pensions if either of these people is eligible, such as a transition to retirement pension. It can also make life insurance payments. You can hold the ownership of life insurance as an asset under the superannuation fund. And as I mentioned, you can have debt and service that debt, which is linked to an income producing asset, such as in this case, a residential property. So all of those flexibilities prevail. You've just got to make sure that you have it documented in an investment policy statement for the fund and update that each year. So while it looks complex, once it's actually set up, these are excellent vehicles for the creation of long-term wealth and for intergenerational wealth transfer.